In 2020, one of Europe's most celebrated fintech companies, Wirecard, imploded in what became one of the biggest corporate scandals of the decade. With over 2 billion missing from its accounts, the scandal exposed the massive web of deceit that shook the financial world. How did this payment giant fool auditors, regulators, and investors for so long? Let's follow the money to unravel the truth. Founded in 1999, Wirecard began a small payment processing company in Germany. By the mid 2010s, it was a fintech darling, providing digital payment services globally. At its peak, Wirecard was valued over 24 billion euros and was even part of Germany's prestigious DAX 300 stock index. But beneath the surface, Wirecard was hiding a dark secret. The company wasn't as profitable as it claimed. In fact, much of its reported revenue and cash reserves simply didn't exist. The first red flags appeared as early as 2008 with allegations of accounting irregularities, but the real scrutiny began in 2019 when investigative journalists from the Financial Times published reports alleging that Wirecard was falsifying its revenue. Wirecard's response? Aggressive denials, lawsuits, and accusations of market manipulations. At the heart of the scandal was a simple question. Did Wirecard really have 1.9 billion euros in cash reserves as it claimed? The company said this money was held in trust accounts in the Philippines, but when auditors from EY tried to verify this, they found nothing. The 1.9 billion euros simply didn't exist. It was a fabrication, one that had been propping up Wirecard's balance sheet for years.
Yeah, so the fraud changed over the years, but what it became was these invented businesses. So they had three basically friends in Singapore, Dubai, and the Philippines. And they said, yeah, we're doing loads of business with these guys, incredibly lucrative. And it turned out they were literally making it up. There was nobody there, nobody at these offices. They would just like send a spreadsheet in with the numbers every quarter. And Ernst & Young would just go, great, looking good, guys, thanks. Yeah. What they did is they said, all our money is in special bank accounts. These aren't our bank accounts. They're looked after by a lawyer. And the accountants were like, great. Well, as long as the lawyer says the money is there, then we're all fine.
Let's follow the money, or in this case, the illusion of money. Wirecard created a network of fake clients and transactions, funneling money between subsidiaries to inflate revenue. This gave the appearance of growth and profitability, fooling investors and auditors alike. Meanwhile, Wirecard executives, including CEO Markus Braun and COO Jan Marsalek, were living a high life. Braun reportedly held hundreds of millions in Wirecard shares, while Marsalek disappeared entirely after the scandal broke, evading international authorities.
And so I get to interview Markus Braun and ask him a bunch of questions and, do all the normal stuff to get, interesting quotes on the record. And then the fun thing about being a journalist is you can be quite rude to people. So I ask him flat out, are you a crook? Are you faking your profits? And he does say that's bullshit. And he does a number of things which notable liars do. Why would I do these things? Doesn't answer the question directly. Doesn't deny it. Look at all the serious people who are involved with us. They wouldn't be involved with a fraud. Ernst & Young, the large accounting firm, or the analysts. But what really stood out was his tone. It was like people asked him if he was a crook all the time. And he's like,
when the truth finally came out in June 2020, Wirecard declared insolvency and its stock value plummeted to almost nothing. Thousands of investors lost billions, and Germany faced questions about how such a massive fraud could happen under its watch. The Wirecard scandal wasn't just a corporate failure, it was a regulatory one. It revealed weaknesses in Germany's financial oversight and shook confidence in the fintech industry worldwide. The Wirecard saga is a sobering reminder of the dangers of blind trust in financial institutions. It showed how charismatic leaders and aggressive tactics can mask systematic fraud. For investors, the lesson is clear. Question everything, even when it seems like a sure bet. Thanks for joining us on this deep dive into the Wirecard scandal. What do you think? Was this a case of corporate greed, regulatory failure, or both? Share your thoughts in the comments and don't forget to subscribe for more stories as we continue to follow the money.